and we have Michael Saylor coming back online, being as bullish as ever. I mean, he's actually more bullish than ever before, because now he's speaking about that, listen, we're going to 13 million, okay? In 21 years, we will be 7% of all capital in the world. Listen to this.
Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%.
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million. But what is it 5 years from now? You're in your 4-year calculus.
You know, it's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8%, because it's always going to be a more global, open, free capital market.
How is there stuff that's above your pay grade? You're worth billions. I mean, we can say that. It's above our pay grade, but who gets to decide if it's above your pay grade?
He might have been it's below his pay grade.
Right, exactly, exactly.
Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or Nvidia stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever.
End it there, Michael. Thank you.
Great.
Yeah, I mean,
Michael,
this is actually very important, that those that buy crypto, they're actually risk averse. This is an interesting take on the situation, because normally you hear people say, oh, you know, those crypto investors, they're crazy, there's crazy risk in crypto. But actually, when you think about it, you are taking a lot of risk if you're outside of crypto, because crypto is really global, neutral, not connected to any kind of company, any kind of country. While if you invest in S&P 500, you're mainly exposed to the US, and God knows what's going to happen with Comrade Kamala when she's in. Let's see what's going to happen. But the same thing is with real estate. You buy real estate, you are in an even worse spot, because not only are you now tying yourself to a country, you're also tying yourself to a local government, like to the county or what the hell you have there. And they can decide anything. They can decide that, you know, you're not allowed to build this and that, all kinds of rules for how you should have your property. So the property rights with real estate, they're very minor. They're super minor. You have to pay the tax, kind of like you're renting it, property tax. So in most countries, you're not really owning anything when you think you own real estate. You don't own it. You rent it, and you're not even allowed to do what the hell you want with it, and you cannot even rent it out because there is rent control. In most countries, there's some kind of socialist rent control. So if you instead see how in the future all of this capital that is now forced into the subpar investment vehicles, like we just mentioned with real estate and all of that, they are now free to go into Bitcoin, and then you can see how this idea of crypto and non-counterparty risk assets spreads worldwide. You can easily see how we get 7% of the world capital in crypto. Anyway, guys, a lot to discuss.